Good morning, everyone, and welcome to another episode of Amazonet's Raw Daily. My name is Alex, and today is most likely Friday, as I'm pre-recording this session. And we want to talk about, or I want to talk about with you today about advertising metrics. And this is a topic I'm very much into. I love to look at metrics, and I'm a very numbers-driven person, a technical person as well. So let's talk a little bit about advertising metrics today, and how do I look at those, and how do I try to make them actionable for me, and what are actually metrics you should look at. So first of all, let's talk about the correct time horizon when you look into your data. What data you look at and how you look at it is very important to get the right story and to understand what's going on. So for example, on a day-to-day basis, I'm not just looking at yesterday or the before, I'm looking at the last 30 days in order to understand if there's a certain trend going on. And if I look at data, I'm always looking for trends. Trends is the thing which gives you an insight. It's not yesterday I made more sales than the day before, and yesterday I made less sales than the day before. This is not really helping you to understand your business and what's going on with your ads, because it's not a trend. There is fluctuations up and down in all of these metrics, and some days you have a good day and some days you have a bad day. Demand is high, demand is low, people are out of stock or not. So there's lots of moving pieces influencing your metrics, and therefore looking at a trend, which involves looking at a couple of days at least, is very necessary. I personally look at the last 30 days. This gives me an idea of what's going on and how is my, let's say, last days compared to the previous days. And do I see an upwards trend or a downwards trend, or a rather flat trend? And if you look at 30 days, you would look at the data on a daily basis. So you want to have a data point for all of these 30 days. Then you have 30 data points, and this gives you a very nice line chart, a very nice trendy view. If you look at data which is longer than 90 days, then you don't look at it at a daily level. You would look at a weekly level. So you would aggregate the data into a week, and then you have on 90 days, you would have 12 weeks already, or 11, 12 weeks, depending. And this already can give you a trend again. You cannot see a trend with only 4 data points or 5. I believe that's too little in order to see a trend. Therefore, you need at least, I don't know, 10 data points in order to spot a trend. And 90 days is the perfect time frame to look at data on a weekly level. So saying it again, if you look at data in the last 30 days, which I recommend to do on a daily basis, then you look at the data on in a daily way. If you look at data between 30 and 90 days, then you would want to aggregate the data on the weekly basis in order to see the trends over weeks, which is also very useful to do at a daily basis to look at your last 90 days. So what I'm looking at daily is I have my chart on the last 30 days, and then I have another chart on the last 8 or 9 weeks. So I look at both time frames in different ways. And that's important because I will immediately understand my short-term trend and my longer-term trend. And what you could do as well is, if you want to look at a rather larger time frame, let's say last 12 months, for example, or last 14 or 18 months or something like that, then you obviously want to aggregate your data on a monthly level. This is very important if you want to look at seasonal trends and year-over-year comparisons. Then it makes sense to have the data aggregated on a monthly level. All right, let's talk about metrics here for a while. So I'm always looking at these kind of metrics, and they are super important for me to look at, and that's why I think you should look at them too. First of all, total revenue. total revenue, not your PPC revenue, but the total revenue from your ASIN or your brand you're selling, giving you a very good indication on how much revenue you're doing. Then you look at your marketing spend, total marketing spend over the same period. This can obviously be broken down into the different spending channels, the different campaign types, the different marketing channels, if you have different activities going on. But in general, for the first view, it would be good to see your total spend against your total revenue. Because if you divide total spend by total revenue, you'll get your total advertising cost of sales, so your total marketing efficiency. This is very important, as this is naturally deducted from your gross profit and your gross margin, and is effective in your contribution margin and your contribution profit. So the higher your total advertising cost of sales, the lower your contribution profit and your contribution margin will be. And therefore, it's very important to have this honor at a glance, seeing that at a daily and a weekly level always is very important for me. Now we talked about revenue, spend, and the calculated metric out of that, total advertising cost of sales, TACOS. The next thing I'm looking at is total contribution profit, which is basically gross profit deducted by the marketing spend. And this is also very important because if I'm not in a growth phase, or if I'm not kind of reaching for a certain goal, let's say I want to reach a bestseller batch, or I want to just sell through a couple of units, then obviously I want my brand and products to be selling profitable. And therefore, I need to look at my total contribution profit of my brand and my ASIN per day and per week and optimize for that. Another important metric I'm looking at is gross margin, because that gives me kind of an indication how much marketing spend I'm actually able to invest. If my gross margin is, let's say, 10%, and my marketing efficiency or my marketing spend ratio, my TACOS, is also 10%, then I'm not getting any contribution profit margin. Then this would be 0. And with all the other costs, which are usually deducted after the marketing, like for my headcount and maybe my rents and so on and so forth, you would actually lose money. So therefore, gross margin is important to look at as well, because it gives you an indication how much marketing spend you're actually able to invest before you would run into a problem. Another important metric on Amazon and Amazon ads is the percent of PPC sales. That's very important because Amazon ads does get very, let's say, it starts to get cannibalizing organic traffic. So if you run ads, it's very easy to push up certain keywords and bids for keywords to be visible on the first spot. But maybe you're also having the first organic spot, and then you're basically helping Amazon to get you the sale, but not organically, but over a paid click. For the paid click, you need to pay, obviously, and it reduces your contribution profit, therefore. So the amount of PPC sales needs to be in balance with the amount of organic sales. There is no good or bad of this ratio, but your aim should be with ads to actually reduce the amount of PPC sales. So what you should try for and aim for is actually turning on PPC in order to push visibility, in order to gain organic ranks, and in order to gain bestseller ranks, seller ranks, and so on and so forth, and to gain a bestseller batch, and then let PPC fade out a little bit to actually harvest some profit. So PPC should not maintain itself and be a self-sustaining system, but it should actually just push organic sales. And you can see that by the amount of PPC sales. And if that is growing over the months and years, you'll have a problem for sure. Because with the amount of PPC sales growing, eventually also your TACOS will grow, because obviously you need to pay more money for the same amount of revenue eventually. Another important metric is the average selling price, so your price per unit, because that is also very important for the gross margin and the revenue, and how many units. So the last metric is units. How many units are you selling? This is very important because the more units you can sell, the better cost of goods sold you can get. Obviously, if I sell a product 100 times a week, I will sell it therefore 400 times a month. So I maybe order from the supplier 400 units each month. But if I sell the same thing at 200 units a week, I double the amount of units I would request from the supplier, and therefore I can ask for a discount as I'm taking more units from him. And with a discount, I can have a better unit economics. With better unit economics, I could lower my ASP. With a lower ASP, I might have a lower margin, but I would sell more units. Therefore, my COGS could improve, and so on and so forth. And with selling more, your bestseller rank will also go up better. So that's the top metrics I'm looking at. And as you heard, I'm not looking at PPC sales, PPC spend too much, or ACOS, because this is really PPC-specific metrics, and they're only useful in some cases. But as a seller and even as an advertiser, you should look at the total metrics, because that's what really counts. And nobody's winning a prize if your PPC sales are scaling, and your total sales are staying flat. So that basically means you're cannibalizing your own sales for the sake of PPC sales, and that's not what you want to do and what you should aim for. Therefore, those metrics does make sense to have them on the side and to look at them from time to time as well. And also ACOS has a certain reason to be looked at, but on a daily basis, it's more advisable to look at your total brand, total ASIN metrics. Obviously, there's more metrics I'm looking at and more metrics you should look at, but this is my top metrics to look at. And with that, I wish you all a good Friday, a happy weekend, and see you next week. Thank you for listening. Bye-bye.